Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within company filings. Today, we're diving into a report that might seem small, but it hints at shifts in leadership. This is a Form 8K filing, which is like a company's immediate bulletin to the public about major events they need to report right away. Think of it as a company shouting, "Heads up," when something significant happens. In this case, Dynex Capital Inc., ticker symbol DX, is making an announcement. The big news here dropped on the 13th of January 2026. Now, what exactly happened? Well, it is about a change in who is steering the ship, or at least part of it. This section tells us about movements in the company's leadership. It covers people leaving or joining as directors or key officers, and details about how they are compensated. It is the part where we see the inner workings of executive and board changes. So the key event is that Joy Palmer, a member of Dynex Capital's board of directors, has decided not to seek re-election. This means her time on the board is coming to an end at the upcoming shareholder meeting. She is not packing her bags today. She will continue to serve on the board until the shareholders officially vote at the annual meeting, which is the typical process for such transitions. Now, this next part is really important and often a key detail in these kinds of announcements. The company is making it clear that Ms. Palmer's decision to step down is not due to any disputes or disagreements she has with Dynex Capital. This phrasing is designed to avoid any suggestion of internal conflict or serious issues within the company. It signals a smooth, amicable departure when we look at a filing like this, especially an 8K specifically about personnel changes. It is often less about complex financial numbers and more about the people and the strategic direction. While there aren't detailed financial tables in this particular report, the move of a director can still tell us something. A director leaving voluntarily, especially without any reported disagreements, might be due to personal reasons, reaching a term limit they had in mind, or perhaps wanting to focus on other ventures. However, in the world of corporate governance, every leadership change, even a seemingly simple one, can set off ripples. A director's experience and perspective can be crucial in guiding a company's strategy. When someone like Ms. Palmer, who has served on the board, decides not to continue, it can prompt questions about what that means for the future direction of Dynex Capital. Will new directors bring fresh ideas? Will they focus on areas different from what Ms. Palmer championed? These are the underlying questions that often follow such announcements. The fact that the company explicitly states there were no disagreements is a way to reassure investors that this isn't a sign of internal turmoil. It is a standard part of these filings to manage public perception and maintain confidence. For a company like Dynex Capital, which operates in financial services, maintaining trust and stability is paramount. Looking at the company's listed securities, we see they have common stock trading under DX and also a Series C preferred stock under DXPRC, both on the New York Stock Exchange. These are the instruments through which investors participate in the company's performance and governance. A change at the board level can, over time, influence decisions that impact these securities. In terms of what this means for the company's direction, it is difficult to say without more context about Ms. Palmer's specific contributions or the company's strategic plans. However, this filing is an indicator that the board composition is evolving. Investors will likely be watching to see who replaces Ms. Palmer and what their background brings to the company. Often, companies will seek directors with specific expertise that aligns with their current or future strategic goals, whether that is in technology, finance, marketing, or governance. From a broad perspective, Dynex Capital Incorporated is a real estate investment trust, or REIT, that focuses on investing in various types of credit investments. Changes in leadership within any company, especially a financial one, are always worth noting. This particular filing is quite straightforward, focusing on a single departure without the complexity of financial reporting that you might see in a 10K or 10. Q, it's a piece of the puzzle in how the company is managing its governance. Now, let's consider the broader implications. The absence of any mention of disagreements is a positive sign for stability, but it also means we don't have a specific reason to scrutinize any particular operational area. It implies that the board is functioning smoothly enough for a director to leave on good terms. However, every departure creates a vacancy, and the process of filling that vacancy is where new strategic influences enter an organization. We will be watching for future filings to see who joins their board and what new perspectives they bring. Alright, that is our breakdown of Dynex Capital's latest filing. What is your take on board changes and their impact on a company's direction? Do you think it is just a formality, or does it signal bigger shifts to come? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.